Welcome everyone to the Midday Connect. We're especially grateful to have Dave Butler here to talk to us today. Just before you all came in out of the breakout rooms, we were talking about product market fit, and the Dave didn't say brutal or bloody, but I'll use those terms of what it can be like, especially for a tech-based company or a startup to nail product market fit or even get close to it. So I'm excited to hear from Dave today. We're also grateful and give a shout out to the sponsors and supporters of the Midday Connect you see there on the bottom of the screen. So without further ado, I'll kick it over to you, Dave, and
Thank you.
let you take us through it.
Let's do it. Let me share my screen. Hope this works. Oh, that's not me. And there we go. Yeah, hang on. Yes, I have a lot of windows open and I'm living here. Anyway, so I'm Dave Butler. I'm a serial entrepreneur. I've been doing startups, tech startups, since the early 90s, which is why I look so old and fossilized. Don't let that happen to you. I've done about a little over a dozen companies as an operator, typically a CRO, sometimes a CEO, but it's always been on the outbound side. And in the last 5 or 6 years, I've been running a sort of a support company for startups that just can't get going. And when everybody starts their new company and they get to market, they get a little bit of traction, and then it just feels like it's just going away. So I'm focusing entirely on that, and we call that market discovery, which is where we're learning about the market, what they want to buy, how they want to buy it, and stuff like that. And the thing is, everybody dies in that phase, and so that's why it's ignored by the consulting industry, and I think you'll see as we talk about product market fit that it's kind of a tricky thing for everybody to get through. So here's the deal. I'm treating this like a normal road trip, and the first three stops are all about what you do to get to product market fit and why. And the second three steps are about what everybody else on earth is doing to stop you. Right?
Hey, Dave, are you sharing your screen right now? I don't see anything.
Oh my goodness. Yeah.
I want to see the stops.
Oh man, that's bad news. So hang on a minute. Share your screen, Dave. There we go. How about that?
There we go. Thanks.
Man, yeah, I would have gone forever if we hadn't called that. So thanks. So yeah, the first three are all about what you do. The second three are all about what's going to happen to you, right? And when people are having a long time getting to product market fit, it's both of those things, right? It's not just the actions that you're taking to reach product market fit. It's also the environment. Just because you're there is going to change. And so the other really great thing about this is that these processes are useful for the rest of time. You can lose product market fit in an hour. One announcement from a new company or an older company that's joining this can just completely change the game and you're out. So you have to constantly, keep these things running. So let me zip into that. I don't want to take too much time today. And I can go deep anywhere you want, but otherwise it'll be a little bit, just a little bit more of a high level view. Okay, so hang on. Okay. All right. So you've got an evil plan. Everybody does. This is why you start a company, right? And in that evil plan, you have a value hypothesis. And a value hypothesis is the core of product market fit. And what it is, basically, you're telling people that, someone has a big problem and you have a solution for that problem and you have an idea as to how to get it to them, right? So this matrix was built by a guy named Howard Marks, who's, early kind of student of market acceptance and so forth. So the bottom line is, if your value hypothesis is wrong, does not matter, right? You're out. And so that makes lots of sense. If people don't like what you're building, or if it doesn't really solve a problem that's important, it's just not going to happen. But on the y-axis on the left is your solution. And if you're right, then there are two places you can be. You can be a consensus player like a lot of other companies, and you're constantly fighting to marginally differentiate yourself against them. And what you find out with them is that they will arbitrage away your profits for the rest of your life. So it's not a bad idea to be non-consensus. That is, be the only one changing the way things are done. If you're perceived that way, they wouldn't even look around for others as much. So in general, when you get out of this, if product market fit is working the way it's supposed to work, you are right on the value hypothesis that you have, and your non-consensus, which is going to get you to outsized growth, oversized growth. So let's step into that a little bit. So the first point along the journey is certain buying patterns. And this is not a hard thing, but it's important to look at. And there are multiple types of product market fit, and people build a new definition every day. But the real question is, who are you selling to? Are you selling to buyers, which are managers or executives or formal buyers in organizations? Or are you selling to users? And if you're selling to buyers, that means you're going to have a sales force. It's sales-led growth. Generally, it's B2B, very often enterprise. And product market fit means that you have a proven, reliable sales process that's also predictable. So in other words, either an investor, even in the secondary market, they want to know that you can be reliable in your revenue every quarter. So that's that. The thing is, if you're selling to buyers also, you are then susceptible to attack and getting thrown out by other companies that are going to go sell to your users. So an example for this is, as a CRO, I can't tell you how many times I bought Salesforce.com and gave it to all the reps in the field, maybe 300-400 people, and they hated it. They hated it, but I needed it because I needed their info to roll up to make sure we knew what we had to do. So it doesn't hurt to do a little bit of a better job trying to make sure the users of whatever it is that you're selling love it, right? So that's one. On the other side, if you are selling to users, that's typically done by the product itself. You've all used products like Calendly and things like that. And this is product-led growth. You're selling it to everyone. You start with freemium, and that's hard to get started. But the thing about selling to users is you get the original reason people wanted to go and look at product market fit, which is, explosive organic growth, meaning you don't do anything. It just sort of happens. And the way that happens is word of mouth. Users talk to each other. Buyers don't. Right. So there's a huge advantage of being in both. And often people grow that way. If you think of Facebook as an easy example, Facebook spent years, and Google did the same, right? It spent years getting users onto their platform for free, and they're still free, and they perfected keeping them. And then they built services for other organizations that preyed upon that installed base, right? Which is basically advertising and other things. So that's really interesting. They went to market and expanded in the classic way for users, and then use sales forces to go sell other products, that take advantage of that. So that's interesting, I think, right? And the last part is, what are we actually going to do? This is a lot of work, and this is where people struggle a little bit. And I pointed out here that AI is your friend. This shortens everything in product market fit, but let's just take a look at the things you'll do all day, right? The first thing is you need to sell to the desperate. We're looking for people that really need what you've got. So you've got an ugly product on the right, so call it a cache canonical concurrent cluster clocker, and it solves puzzles or problems. So the simple question is, what one of those problems, including the 17-dimensional Rubik's Cube, needs help desperately? Any person is going to solve the other three, but the Rubik's Cube, probably not. That's the one that's desperate. So that's just a simple illustration to talk about what it feels like when people like, Mark Andreessen are always talking about product market fit sucks the product in. You're finding people with a problem that they have to solve for their lives. And then off you go. So when you're looking, you need to outreach to your marketplace, and you've got an initial idea, your value hypothesis that we talked about. And that is, I think a certain pain point is applicable to a certain target market, tiny, an ICP. And you are pivoting, not really pivoting, but testing adjacencies to those ideas. You also test, of course, your own, right? So you go to the people that look like your target customer, but you're also looking around to other organizations or other potential customers in the organization, and you monitor all of this really, really carefully. And so you'll see hotspots pop up, and maybe they're in your initial focus, but really very, very often you find other people that are more desperate than your initial focus, and you pivot over there and you dominate that area, and then you move, you select another one and expand, ideal customer profile by ideal customer profile, ICP. So you pick a place, you find somebody that's desperate, sell, and keep iterating on that. Right. So that is just the simple process. Now I want to talk a little bit about what people will either do or, on purpose or just by nature to slow you down. And one of them is something that we've all known for 40 years, which is crossing the chasm. So let me just lay this one out. This is as true as it ever was, right? And the essence of it is there are, forget the innovators, those people are weird, but the early adopters have the problem. Their definition is they are desperate people. They really need to get this thing solved, right? And there could be many, many others in the industry that would, have less urgency, but would like to do it as well. That's the early majority. And here's the deal, right? So when you're selling to the desperate, the early adopters are who those people are, and they're a gift because you can find them. And the second is they are grateful and they will give you fantastic references. And the reason you need that is that there is no early adopter or early majority person that will buy the first product from a company. They need real, meaningful references from people who've used your product that you don't know, right? That you're not talking to, your Uncle George, to give you a good reference. This is the real deal. So if you don't pay attention to this, people spend all their time spreading a wide net, trying to find people everywhere. And when you do that, it takes years, right? Just in my career, it has taken us sometimes 3, 4, 5 years to find meaningful product market fit. We don't want to do that. So the bottom line is get it started with the early adopters, and only then start looking into the early majority. The next one is, these are things inside your company, and if you can't do them well, this effort will go on forever. This becomes, product market fit becomes the Shawshank crawl. And so there are a lot of these, but these are the 4 biggie, and I'm just going to mention them. Market access is the recognition that nobody wants to hear from you, right? Everybody has so much internet noise, so many people calling them, they can't stand it, right? So you need to find inexpensive ways to break through and get to them. And to do that, you need to have a problem that resonates. You don't talk about what you do, which is what many startups do. You talk about the problem that they've got. Right? And that, just the structure of a problem during product market fit is very complex. And I'll just give you this one example here. That ad is my favorite ad because there's such an evil in it. Until 1953, Marlboro and other cigarette companies advertised, and they were differentiating based upon the filter. You can see that on the bottom, or structure of the box. It's just, there was no difference. My tobacco was grown better than your tobacco, right? That's just the way it was. And then they put this ad out, and basically they weren't addressing the actual problem, like, is you're going to buy a cigarette, but whose, right? That's not the situation. Here they're saying, look, the cigarette and its filter is not your real problem. Your problem is you don't look cool. And if you don't look cool, you will not be attractive to whomever you want to be attracted to you. Right. So you can look at it, right? They're saying, look, you're never going to get a date for the rest of your life unless you smoke Marlboros. I'm not kidding. On the release of this ad, Marlboro went up 3,400% in sales almost overnight. So structure of problem really matters. You spend a lot of time looking at this. Next one is the insertion. And I can just give you two examples here, but the net is nobody buys, nobody just jumps in and says, I'm switching from this to that without an evolutionary integration, right? And I was the CRO of a wireless security company called Aruba. And, insertion, this was my first IPO with a California venture group, which was Sequoia. It was leading this. And, what happened was we checked our product before we built it with 15 companies, half of them in California, half of them in New York City, that were super high tech and said, look, everybody has Wi-Fi at home, but nobody has it in the office. Let's fix that. And that's, all about the Wi-Fi, and it's about security and things like that. And they loved the idea, and they helped us. They were flying out to our product meetings. It was amazing. But when we got to market, when the product was ready, no one bought. 6 months into it, I'm begging to keep my job. I could not figure it out. And one day, one of the guys was, kind of walking our equipment out of another sort of failed trial where they didn't buy it. And he discovered that he could still log into the network after we pulled our stuff out, the wireless network. And went back to the customer and they said, oh my God, people are bringing in wireless access points from their house and plugging it into, the bank, right? This was Alliance Capital in New York. Can you imagine that? You've been running with your full trading floor open to the world forever. Boom. So the customer came back and said, if you make your product get rid of everybody else's unauthorized wireless, we can do that. We'll deploy the whole thing. Boom. Less than 9 months later, we are preparing to file our IPO, right? So insertion was the thing that was big. And another one is, that's happening now is Fathom Video, right? These are AI companies that are attaching to everything. This is one that attaches onto Zoom. And the last one is go-to-market fit, right? That is, you're going to have to take people through a sales process, but you shouldn't be hiring a lot of people to do that. So you need people that can help walk you through. So these are the kinds of internal problems that are there whenever you're searching for product market fit. And if you can't do any of these, or if there's just one of them that you can't do well, you're basically dead in the water in terms of finding product market fit. So last one is, what is the ecosystem going to do? When I was, beginning in this, super, kind of tech-based focused on product market fit in the 90s, there were only 300 credible venture capitalists globally. And now there are tens of thousands. So it used to be just, you can see where the yellow is up there. It used to be in the Bay Area and Boston and London. Now they're everywhere. You can get money if you are credible and viable. And if you announce your product loudly before you have product market fit, all of them are listening. A bunch of them will pop up startups to compete with you. And, you basically just, stepped on it in a trap. So if you think about what that does, it puts everyone into that consensus bucket I was talking about up front. And that's just it's an enormous problem. So an example is, software-defined networking, wide area networks, right? This is, a way to just order like a network for your company over the internet without AT&T and digging cables and stuff like that. Just happens. And there, by the time anybody was viable in the market, there were over 100 well-funded, really credible companies, and this happened in less than a year. So the message is, if you start talking about yourself before you're ready, you are just creating a delay in finding product market fit. So that's the scoop. Let me just close out here and say there are really just three phases for any new company. And the first is, get your product, right? Get your product so that you can at least demonstrate something and get going. That's an engineering function. The second is where I focus on entirely, which is market discovery. And you can't hire the wrong people here. And if you do, that's why people really fail. They fail because they've hired people that aren't well suited for that process. And the people that they hire are famous, awesome people. These are go-to-market execution people. These are like Steve Ballmer's and people like that. All startups, at least in this valley, are trying to get the most credible VPs of sales and marketing and product and all that. And those people earned their reputation in growth phase, not so much in the learning phase. And so what we say is, look, the founders have to do it all themselves, and they can rent people like pathfinders, the people that understand all these disciplines and come in for short periods of time. I rent those out as part of my business. So that's the scoop. And, just remember, in truth, right? Roughly 90% of companies that have been funded by credible venture capitalists will fail. And by fail, I don't mean just go out of business. It could also be a fire sale, right? Sale for assets kind of thing. But it looks like it was a good acquisition or something. But 90% of them basically don't return anything to the employees or the investors. And that's a problem. And what I will tell you is they don't know why they failed. If you ask them, a few will say product market fit, but they'll say, look, we were fighting, the market wasn't right. They really don't know why they failed, because if they did know, they would have done something about it. The reason they failed is they ran out of money before they could get sales to take off. That's it, right? I mean, and then fights start and all those other things. So that's it. And with that, I'd like to just say thank you. And if I took too long, I apologize for that.
No, it was great, Dave.
Yeah, no worries.
That was great. So I would love to open it up now for questions. And while people are getting started up on that, I don't know if it was a thought or a question, but when you were talking non-consensus versus and consensus, to me, that sounded like cutting edge and bleeding edge. Bleeding edge being you're just out there competing against a known problem and known players. But am I right to think of non-consensus as cutting edge?
Yes, but cutting edge means what non-consensus means, there aren't a lot of other people solving this problem, either the way you do or how you do it. There's some differentiation that is actually material. And it's not like you're walking in and saying, look, mine has cache canonical concurrent cluster clocking in it, right? I'm talking about really meaningful things, right? So this is a change in business model like Uber or Airbnb, or it's the thing that you do that is not the same as what prospects tell you to go do. So lots of people say, look, go into the account, and they say, look, I don't like it. Ask them what I should do. It's fine to do this, but the companies that come out with that, and follow advice from, uneducated prospect, follow it one after another, you end up right in the middle of consensus. And the bottom line is, do you want to go to market in a market where your differentiation is minimal, or do you want to go to market where your differentiation is devastating? And it takes a while to figure that out. I don't know if I answered your question, but that's what I'm thinking.
It gave me a lot to think about too. So yeah. Okay. Come on.
By the way, the guy on this is Andy Ratcliffe, if you know him. He is the guru for all of this. And I'll send, anybody that wants just connect with me, and I'll send everything to you guys. But I did not come up with one word of what I said. The guy that has driven literally every venture capitalist is Andy Ratcliffe, who founded Benchmark Capital. And he was still is a believer in organic growth, which is word of mouth. And he built a large company called Wealthfront, never advertised, never built sales, just got a few people using it and let word of mouth go. And, it was devastating, still is devastating. So Andy Ratcliffe is the guy, and I'll send anybody who asks stuff, and I'll send it to you guys at Summit.
questions from the group? You can put it in the chat.
Yeah, I had,
Go ahead, Randy.
um, hey Dave,
Hey,
you had said that you said if you start talking about yourself early, you are creating a delay in product market fit. I was just wondering if you could explain that.
yeah. If you start talking about, the profound change that you're going to make early, before you've actually validated it, the effect is to scare other really strong venture companies and entrepreneurs to go, that sounds like a great market. Let's go in. We know something more about this than those guys do. Right. So basically, you're encouraging competition before you even have sales. And so that's what I was referring to.
Okay, I got you. Thank you.
So I had
Yeah.
another question then, Dave, about pathfinders, and I know you've created a practice around finding them and connecting them, but what are some of the specific experiences that you use to qualify a pathfinder?
So, a Pathfinder is a person that is multidisciplinary and is a scientist at heart, right? So in product market fit, you're coming up with a hypothesis and testing it. And that is a science practice. The people in growth stage, those people, the famous people, they are devastating experts at expanding something that already has product market fit, right? And go to market fit and so forth. So they are all about efficiency and scale and fast. And it is really hard to find those people that can just fit in, but it's impossible to find them if you haven't figured out the product market fit thing. So when you're in the business forever, you come across these people that really are more motivated by figuring it out than just they're not coin operated like normal salespeople are. They are, intellectually thrilled by seeing these kinds of changes. They're into it, and those people are interesting too. And so that's what pathfinders are. I just have I have a stable of like 100 of them, and I work with them on 1099s, but they must know something about product, sales, marketing, those three areas. Otherwise they get blown out. And when companies do start up, if you bring in the growth people, they start immediately siloing themselves into departments. Marketing guys are off doing this. They create leads, give them to sales. Sales says your leads suck. We're not going to listen to you. They go off and do everything on their own. So, you need people to really look at the whole problem, like the CEO does, and have her viewpoint in mind as they're going about, figuring product market fit out. So, but hiring these people is tough because they're all mutants, and they it's easier to rent them, which is the only reason I did that. I mean, they're the weirdos in the group, the outliers. They're G's. So they're fantastic too, but they get bored when it becomes, sort of you have product market fit and you're a growth company. They just get bored.
Taylor, you came off mute. You got a question?
Yeah, Dave, what would you say the top two or three biggest mistakes are for entrepreneurs or the presidents of companies trying to identify or achieve product market fit?
Um, it's basically the three that were kind of in the presentation. One of them is they are so anxious to start selling that they start bringing on expensive people that are experts at selling. And they're not experts at selling something that nobody wants because nobody's ever heard of it and they don't understand what, you need evangelists, right? So if you hire growth stage people, you will run out of money and die unless you fix it quick enough. And let's see, I forgot my whole thing there, but yeah, and the other type of thing is you've got to make sure that when you're testing, you're not bogged down in other functions. Like, you can't reach the market. I cannot tell you how many CEOs ask me, so look, I just need introductions to clients. No one will take our calls. Nobody's listening. I hate, they just won't pick up the phone, and take a sales pitch from us. So if you don't figure out how to access that market and articulate your problem, these are kind of early parts of testing the product. How you sell it is part of the product. How they view it is essentially part of the product. So it's getting rid of the roadblocks so you can do the experimentation. And the last thing is that some people just don't want to do the experimentation. They're just so self-assured that they just jump in and say, screw it, we're going to market. And they spread a wide net. They say, look, I don't want to have a narrow ideal customer profile. I want to just sell because my product, everybody in the world should want it. Why should I cut back what we're doing? Well, when you're just throwing a net out there like that, you can't figure out what's wrong. You just can't figure it out. It's like, and they fall into the chasm, right? When that happens, they get a bunch of early sales and then just nothing happens. And 3 CEOs later, somebody figures it out. Anyway,
Other questions? Sometimes we have to just pause for a minute, Dave.
no worries. I got a DM from a VP of operations I've known in tech in Asia, and he just said, now I know how to define myself, and why I get so freaking disinterested when a startup becomes management by spreadsheet and org chart. So thanks, man. I didn't feel comfortable saying the true level of evil that accompanies all that.
I have another question.
Yeah.
You had talked about the need to have strong differentiation between you and competitors. And that's the consensus versus non-consensus. And I was wondering what your what would you say? Because it seems like in the tech market right now, it's kind of difficult to have a strong differentiation, but that doesn't mean there's not still opportunities. So let's suppose you can't specifically be super different. What other ways can you kind of have an edge? Would that be marketing or just having a strong team? Like, what would you say to that?
It's usually a product differentiation, because you can lose your advantages in marketing and sales or whatever instantly, right? So this doesn't mean that you have to invent some crazy thing, right? Like SpaceX obviously was dramatically different, and Uber was dramatically different. But you do need to be perceived as, hey, these guys are just not the same. And very often that says, I'm not going to sell to these people that have a problem. I'm going to address a larger problem where that's in it, something like that. Or maybe a different organization would be, make better use of the solution. I'll give you one example. Sometimes, this is tech again, but there are people that buy stuff and then people that run it. And networks are like this in data centers and server infrastructure. And so that these architects that are buying products are buying for things that matter to them. And then the people that keep it running, they call these people like SREs and stuff like that. Those people are furious, at who bought. So if you separate these things, then you're selling to one or the other, and you haven't addressed the underlying conflict, which is, how do we get people who buy to buy what we want and need, or how do we get the people that run this stuff to understand the rationale of what we've got. So a product itself could address that, right? The product itself could address the two constituents and not make the mistake of the others of just addressing one. So it would be great if you had the ability to invent some, amazing new tech, but that, as you say, it doesn't happen very often. It just happens from time to time. But here's an example: AI. Every AI company is doing exactly this right now, right? And there are zillions of them, and they have found ways not to compete. So the underlying technology is being rented, by OpenAI or from OpenAI or Microsoft or somebody. Then they build applications to use it into the marketplace. So, I'm a consumer of a lot of AI, and it's just all different. It just continues to be different. Microsoft Office applications used to be all there was, and now that's being displaced by sort of higher level things like Notion, right? Notion is, that's killing Google, Google Drive. So there's a lot of ways to do it, and you need to figure it out. And there's not going to be, there's not an algorithm. It's just insight, and you can only get that insight in the field.
Awesome. Thanks, Dave.
You're welcome.
Okay. Well, how do people reach you? Is LinkedIn the best way?
LinkedIn is fine, but I'm also Dave at Prendessa, Prendessa. And LinkedIn works great too. And I'd be thrilled to send all the source material behind all this so you can really dig down into any of these areas that are interesting. This is an enormous topic to cover in a short time. I mean, by enormous, I mean it's a year and a half kind of thing to grok.
Awesome. Okay. Great to have you with us. Thanks everyone for coming in, and we'll see you next week.
It's a pleasure. Thank you.
Thanks.
Take care.